Okay, good morning, all. This is Stanley Hemsey. I'm running a little bit late. It's 8:37 a.m. It's December 1st, Wednesday, 2021. Welcome, everyone. As promised, we are privileged to have Admiral Esposito here, and he's going to give us a talk about Omicron variant from his point of view as a participant and a very active biotech fund manager. Before I go there, very, very quickly, just our housekeeping. Software key went out for the elite members of the day trading system. Check your system. Remember, we don't trade on Wednesdays on that. Historically, data has not been good, so we've just turned that off. But I just wanted to stay on schedule with you guys. Aside from that, the work on the second part of the puzzle, the post-ID system, is beginning to start now that the user guide for the system is also available and is posted on the members area. Any questions, let us know. With that said, before I start my meeting, why don't we have, before I start my part of the pitch and what I'm going to go through, let's have Admiral here so that he can do his thing about Omicron and get him a chance to get ready for the open. With that said, Admiral, it's all yours.
Okay, thank you very much, Fari. Hello, everybody. We talked about this a little bit yesterday in a couple of the chat rooms, and Fari wanted me to convey what I know, what I've seen, what I've read. So they're finding out today that it's coming out that the Omicron virus was basically in Europe first, not in Africa. And now it's spreading, and what they found that it spreads faster than the Delta variant, which is also a mutation of the COVID SARS virus. And these mutations continue to happen as the virus tries to find different ways to get into the human body and get past the protection or the prophylactics that the either the antivirals or the vaccines have. So what came out this morning, which I think is important, is that it seems that they're not as pessimistic regarding Omicron. They feel that the vaccines, previous vaccines such as AstraZeneca, Pfizer BioNTech, Moderna, Johnson & Johnson, they seem to be providing some protection in that it's not elevated to a very serious, life-threatening disease. It's just making people very, very sick, which is a good thing that it's only very, very sick versus hospitalization and death. So because that's been happening in the latest few days, they think that the previous vaccines are working somewhat, and the previous antivirals are working somewhat. The AstraZeneca in Europe and the biotech in Europe and Pfizer, they're confident that it will continue to be a prophylactic against this new variant. Moderna, however, and Regeneron, they're not as optimistic. And of course, all of these companies, including Merck, which has their new approved antiviral/vaccine pill, molnupiravir, on the market, just got approved yesterday. They feel confident that that will be a prophylactic against the new variant as well. Moderna, however, and Regeneron, they're working to enhance with their booster shots their vaccines, and they're also working on the new drawing board for creating another vaccine in case the Omicron becomes a very serious death-causing variant of COVID-19. So I think things have calmed down somewhat. They're worried that it's spreading faster than the Delta, and I think they expect that they could have an emergency medical authorization for a new vaccine, possibly could get approved in 3 months at the pace that they're working on this new vaccine slash booster slash antiviral to cope with Omicron. And what's important to know is that, way back when this all began, we talked about in that time frame that, they expedited to create a vaccine in 12 months, which is unheard of. Normally tests and trials take 2-3 years. So they encompass all that needs to be encompassed to make sure that it's a much stronger, impenetrable wall. When you expedite and you move down that path and you get it done in 12 months, 18 months, you're leaving some cracks in the wall. And that's what happens when these viruses mutate. They mutate to find those cracks, and then when they get through, that's what causes the problem. So this is something that's happened because we had to find some type of help to save people's lives. And what they're going to have to do is continually be flexible in creating new boosters slash vaccines to cope with the COVID-19, the SARS virus, as it mutates, which it will always do to try and find a way into the human body. So that's really about it, Fari.
Thank you, sir. Appreciate that. Any questions for Admiral? Any questions, guys? Okay, let me get us started. Thank you, Admiral. Appreciate it.
All right, thank you. Have a great day, everybody.
Will do. Okay, let's go to our routine here. As you know, we go first with the Econ Calendar. So let's go there and see what we are up to. Wednesday, December 1st. Jerome Powell speaks at 10 a.m. Don't forget that. But that, we got consensus. We have ISM manufacturing at 10. That's a red report. This morning we have ADP coming at 8:15. Well, let's take a look at that. That's a precursor to a Friday. 534 against consensus of 529. Okay, that's in line. Noise level change versus consensus. Okay, I'll take it. Look at the revision, very little revision. All of these time series about labor data. Like what do you call it? Inherently are very noisy. So because it's just happening so fast and so in sequence. So what you do, you need to wait to see what the last month and prior month get adjusted. That's what we talked about also yesterday in the chat. So that's coming in line. Adjustment was very little. So no news on what this number is. We're going to get into. Let's see what ISM is going to have at 10 today. Don't forget we have manufacturing, PMI manufacturing too, but that's only green report. Okay, 60.8 consent for prior, 61.1, and look at that tight range. All right, so that's coming up at 10 o'clock, top of the first hour. Okay, that's today. Yeah, it's no point. Okay, we have also beige book in the afternoon. I'm not crazy about that. Let's see what PMI manufacturing are looking for. Because, also very tight, and that's all I have. There's no adjustment. Okay, hold on. All right, let's see. Thursday, jobless claims again. Okay, jobless claims have dropped to like 50-year low, some crazy number. We'll see. Hold on. Yeah, 199. Yeah, it's very low. 245 now. Back to normal. Could be a fluke for that time. Also, this one would be a partial week. Keep that in mind, all right? Yeah, that was a huge drop, 71. Is the economy doing better? Oh, of course. Should be to anybody now. It's just people trying to get back to work. And it's a pent-up demand, so that's causing some of that inflation. Let's go to factory orders first. Yeah, of course, Long Beach. But they're saying as of last night, 37% lower in October. So they're beginning to resolve that too. But it takes time. Yeah, we should be here, but we are. It is what it is. Month to month, 0.2 on factory orders. Consensus should be half a percent. That was prior. Look at that wide range. Okay, we shall see what this comes out. All right. And then I don't care about that. All right, let's go to ISM services. I'm giving you the best order. Hold on. Both of them are at 10 o'clock on Friday. Remember, on Fridays, on non-farms, I work half a day. That's it. If you cannot get it done by 10:30, your goal, it's not going to happen to you that day. East, all times are being east. Get out of the way. Okay. Afternoon is going to be a sausage. You don't want that. Okay, 66.7 prior. Consensus 65. Okay. All right. So nothing crazy on the services either. Okay, let's go to non-farm. If you're going to trade with us, be in early because the whole thing starts an hour early. Okay, prior was 531. We're going to see how much that adjustment we get there. 543 now. Oh, that's close. Okay. And then 306,625. Okay. I'm not crazy about unemployment rate. I don't care because part of it is participation rate is so low. You know, manufacturing, that's key. 60 to 45. Gee, that's not good. Wide range. Okay. Private 604, 525 lower. Uh-oh. It's going to be a tough one, guys, I think. 0.25, 0.25, 49.5. Yeah. And then ours are very tight. This is another one I like to look at. Average work week has been around 37, 34.7. Listen, I'm not an economist. But I understand numbers, so I'm trying to look at it. Just look at it from a standpoint of a time series. And that's what markets are. You're looking at a bunch of time series. So, all right. Let's get done here. Let's go to charts. Okay. My favorite part here. As you know, we went long Sunday night. It had a little bump there. We dropped down yesterday and talk about launchpad mode. 268 negative. Yesterday at the close. Negative 3 sigma. I was close enough as of Friday, and we went down. I believe how much we went down. We went up, I believe, 30 points, 67 versus that's the close. Let's see, the close there was 70, 55. I would close. I'm sorry, we closed down about 80 handles yesterday, or 88 handles. Some crazy number down there. Yeah, okay. 67 close versus 655. So about 90 handles, 88, 90 handles. Okay. We are up right now about 60 handles. So we've taken 2/3 of it back. If you traded last night, it was a good day. It was good overnight. Okay. Thank you. It's NASDAQ sort of 211. We'll get into that in a bit. So we're up heavy on NQ. Basically, that says day trading today is going to be difficult. Just keep that in mind. Outside bar on NASDAQ. And this is all-time high, 4744, 1676. Up. I'm staying bullish here. I'm not changing my position. I was short for a while. I took that advantage. Should have closed yesterday. Here where we are. I mean, I'm long from this level. From 45.94. So we're up about 26 handles right now. If we open where we are there. So what's key important is this. Breath cross, we do not see it below 40 much. This is a launch pad mode. Also, we'll talk about VIX too. If you look at 30 days, 60 days forward, when the VIX behaved like it did, and there was a study that I think Peter did and he shared with us. It's and I don't have the detail in front of me, but it's in the email. It's very, very positive down the road. So basically, what I'm saying is, given these two readings, 268 negative on McClellan oscillator, on all of NYSE, negative 34 on Red Trust, yes, we are entering a tough area. Fear is coming in. We may even touch 45.36 or where those two collide as the 50 bar moves up. That's 50 bar. This is 200. I think you're gonna set up to rally up. Omicron is in the challenge. There's no question. So is Jerome Powell. But I think they're all pointing to the right way, which is we got better tools. We're gonna take care of people, and if Jerome Powell says, I mean, cutting back on tapering, he's looking data more positive than you and I are. Okay, so, and of course they have resources we don't have. Now, we had a big reading on Friday on the up and down volume. You saw that. This was about let's see, what do we have there? I forgot. Yeah, we had a hold on, no, here. Sorry. We had a reading of 992. We have 908. Usually this doesn't happen. There's a Lowry, also a volume I'm going to look into. Usually this doesn't happen, but this is a flush. They're getting rid of the week longs and selling is stopping, most likely here. So I would nibble in slowly. We have some long position on the options. We're going to continue to hold them because of December. We may roll them to January. But moving forward, all other things being equal, I'm staying positive. Now, the data we change that. You know, the market will change that. We'll see how that comes in. Here's your clearly the coal mine. I did complain about this. Remember that on the new highs on the the transportation index. That's also coming to 3 sigma. The one that sold the most Russell, twice 3 sigmas. These are typical flushes. CI did as well. CI did his work. Look at that CI call. Yeah, but the problem with the Russell is that. Oh, I'm sorry, that's utility. Problem with the Russell is no, actually, there's no problem there. If you got mapped new highs on the 111.8, what did it do on this with new highs was 11.22. Okay, so that peaked early. Actually, no, I have no complaints. It is working where it's supposed to. It's leading it, and it's understandable. Okay, outside bar again. We have 1, 2 detrended are negative. That's only on the Russell. So 6 out of 8 are positive. That's not enough for the necessary reversal, but it's a scoring indicator in terms of count that we have. So it's 2 out of 8. Moving forward, SP1 Momo. Okay, it went on a sell on Friday. On Friday close. So it got whacked on Monday and then made some money yesterday. That's what the daily system. Very mechanical, no adjustments. It's run for years. Is it good for trading? Not necessarily, but it's a good input. The one that gives a less noisier picture is the weekly, and it's still on the buy. Let's see what else I have. Okay, big pickup in the 52 weeks lows. This is on a daily basis. This was yesterday data. Typically, this setup, anything above 40, this sets up for a low. So this is another signal that we're at a low. Last night, before the close, we were below -10 on Momo. And you know that's another buy. So we could get below 10 today, intraday. I doubt it, not the way we've opened up. But for all technical purposes, maybe we have one more shake. If you could withstand that, I think showing some guts and staying long is good. Again, data-driven. Forget the politics, forget what's outside, forget the news and Twitter and this and that. Stay with the data. -3 sigma again on SP1. All of these pointing to the upside move. Now, Vols, this was a huge move. This was a huge move on Friday. And actually preceded that. Friday was, let's see. This is a pullback on Friday. Yeah. This was a, no, I'm sorry. No, this is this morning. Sorry. This is Friday. I'm right. We went to 4 sigma. Okay. And I think the move there was some crazy number, like something like 50%. Typically, when VIX does that, the next 4 weeks to 8 weeks are very positive. So keep an eye on that moving forward. This is F22 trading there. I don't know if that's here. Okay. CL is still coming there. Good. Okay. This is a January contract on crude. Let's see. VIX is coming to a crossover there on the CI. So we should pull back. Also, you know my work in the past, including some of the stuff we posted on our blog. When you get to 4 and higher, 4, 5, 6 sigmas on the VIX, usually we don't get that often. Four is we can see 4, 5, and 6 are very rare sigmas. Once you get there, that's they've killed the bird. Okay, it's done. What happens after that is slowly the indice is pulling itself up. Russell is still up there, holding up pretty high. Again, close almost hit the 3 sigma yesterday. The dash is 4. Okay, remember this is inverse assets. So as these go up, markets come down. All right. Let's see what else is it. SQ. One of my favorite indicators. Okay. SQ is holding up in about 1 sigma. It's 150, right at the design limit. Okay. Now that may be something we should worry about. Why? Because when we are down this far, this number should be a lot lower. This still says there's a downward risk that's being priced in by the big boys. Why? They trade the SPX options, and this is the tail risk on the downside. So these are the put options. So it's still fairly large activity there. Could be tax selling, could be... No, we have 3 items in front of us. Part of it because of the partisanship on the floor, specifically Moscow Mitch. It's debt ceiling, it's the build back better, and defense authorization. I think last night there was a talk about that. That should get resolved. And also, we're running out of money. I think, especially running out of money first, and debt ceiling is like on the 15th where the problem is. So they've got so the Congress as a whole, because they agree so much with each other, they have one hell of a Christmas gift waiting for all of us, which is a tumultuous next couple of weeks. After that, we're good. If we look at the data, how does it work out? It's going to give us heartburn every day. So make sure you come in with full stomach and breakfast before you go to trading. It's not going to be easy. How the systems will do in this context, don't know. This system is new. We're still gathering day-to-day experience with it. So rather than me promising something and look at the only upside, I'd rather warn you and give you a disclaimer as if you're reading a CFTC prospectus or CFTC sanctioned prospectus. So there's a lot of bump ahead, not easy. And the ones we're going to get into trouble most, in my humble opinion, are the small accounts. I just turned on an account yesterday. A returning client, he had taken off for about a year now. He want to come back, and I just told him it's just not going to happen. These markets are difficult, and he wasn't a bit dismayed. But you got to tell truth to power. It is what it is. I don't make these rules. I'm just observing it and I'm understanding it and kind of finding it. Kind of more data points. Okay, let's get into this point. All right. SP2, I know a couple of you guys asked for me about it last night. I'm sorry. On Saturday. Yeah, not last night. Nobody asked last night. I think last night everybody was kind of a numb. We did have a reading of 20, which is 5% below the buy zone on Friday. Okay. Now, the bounce is because we pulled up. It didn't pull it back down again. But typically, that's how you build a classic bullish divergence. We're going to be lower in price. And because we're going to open higher, I'm willing to bet you that we're going to pop up first. What happens the rest of the day, nobody knows. Nobody knows order flow. But assuming we stay where we are or somewhere thereabouts, then you have the classical bullish divergence. You have it. Lower price, higher indicator reading. Now, on the stock RSI, which is not my indicator, it's 2 chart channels. I just quoted it because nobody else had quoted it. It creates what I call a rendezvous point. We had a rendezvous point up here when the 3 of them matched and looked like we were heading there. This says we got maybe a few days more, maybe another week. I don't like confirmations on the bullish divergence that close. I'd rather be a little bit far apart. If the budget issue is the 15th of December, then we're good. We're set up right. That is, 2 weeks from now, we could see another leg down, and that should set up for us for buy point if we look at the internals carefully. We'll see. We'll see how that goes. Again, nobody can predict order flow, especially when you're this high up. You're in the very greedy period of the market, not fear. So when any fear comes, you have a lot to lose. Everything is evaluation was too high. Part of that problem is cheap money. Part of it started last year, actually, not because of the government. No, but Fed. The Fed did that. I am very happy, extremely happy that Biden decided, and I tweeted that strictly to him and saying, hey, explicitly saying, Jerome Powell stays, don't touch him. Because what he did, in my opinion, again, my humble opinion, they're both Princeton guys, him and Bernanke. But, well, he talked, he wasn't like he, but both of those guys saved us from the last two debacles we've had. But if you really measure, this is a key point, this is a distinction, the kind of a help that Powell gave us, specifically on March 23rd, the day the low was put in, and the night before we went long, right? It's 18,000. My target is 18. If you remember, 18,000 back here. Oh, let me go here. Actually, let's do it like this, easier. Okay, this low. I said 18,000 on the Dow, which was the day Trump was elected. I said when he takes that out, that's the low. And March 20th, which is the New Year. Persian. Spring equinox. Spring equinox and 18,000 cross is a good possibility. It's a webinar to that effect. You can listen to that. What happened on the 23rd, which I just got to know more about it recently. There was a special on the frontline. He came in and introduced what made the difference on the 23rd. And that's that week. That we took off. This was a close. We went a little bit lower on that day when he introduced it, and then we never looked back. He saved us. Powell did. And now, too much pumping of money? Probably. But if that's the case, let him deal with it. He knows what he put out. Let him slowly put it back in. I think with it, now, one thing I disagree with him on yesterday, the Omicron could be challenging as more data comes in. I think you probably see him a little bit ease off on this comment yesterday that said that we're going to start tapering sooner. I think tapering will happen, but tapering will be, and yesterday was a tantrum. You see the tapering tantrum. You'll see that he's going to ease off on that because the data will show this is a difficult issue to deal with. When you have 30 to 50 mutations, I'm not a biotech guy. I listen to people like Admiral and Reed and talk to a few guys I know that are in the business. This is going to be more challenging than before. As long as we don't shut down, I think the economy will move on. But we need Powell to also understand that he cannot tighten up now. That could be a difficult one. All right. Let's see. And look at another divergence here. We did not get into. That's it. This is Friday, right? This is a Friday close. We pulled up a tad here. This is on the futures spread, the 3 months futures. And so I think this is off at that. Guys, hold on one second. I got to fix this. Not going there like this. Hold on. I think we're off. Yes. Oh, shoot. Give me a break. Okay. December. Yeah, it should be December. So this goes to, hold on. Yeah, let's update this. That's wrong. This is 21. So this one has to go to H22. Can't wait for next year. We have F23, my favorite airplane. I was on a bid team. The ones that they didn't build. Yeah. Hold on. Let's see. Okay. Yeah, that's more realistic. That's more realistic to the values. Okay. Now, you could see here. Yeah, the spread should be. Okay. You can see that. Yeah, that makes sense now. That chart didn't look right. Okay. This is the close on Friday. Partial day we had. Look where we went. Went to 3 sigma on it, right? Of the spread itself. Look, we were lower reading there, and we're spread is here. So that's another At the margin, if you look for the integration in detail, you see that we have a also the VIX future is saying that we may have seen the lows. We may have seen the lows. Okay, just to be on the safe side. Treasury yields. What time is it? 9:07. We're going to try to wrap this up in the next 5 minutes. This is how many times? How many months back? How many years back we're doing? 5. We've gone 3 years. Okay. Yeah, it can't go too far back because it becomes the chart becomes squeezed and unmanageable. Okay. The last 3 years, that's all time high. 2.8, 2.9, and 3.2. These are cars, homes, long-term maturities like insurance investments and so forth. Buildings and so forth, Manhattan, all that. So this was a big drop on oil. This caused the oil drop on Friday, and we pulled down. We pulled on actually here. Now the new levels are coming up. Remember, this is first of the month. This is as we put the first tick in for today. As you know, this thing broadcasts out of our bond when the bonds open. So at 8:20 this starts in Chicago. We have a first tick. We see the levels. Levels are shifting down. I think I don't want to read too much into this. This is a lot of sideways, but at least the pressure up we had is fading for now. Let's see what else do I have here. Okay, there you go. Let's go to here. This I often show in the chat room. You know that a couple of times a week, maybe once a day. I'll post on Twitter with my friend Bo Natvick. He's the one who got me on this, and also this is the buying power with Peter Cook, our moderator for the chat room. He's did a lot of work on this. These are proprietary data from TradeStation, not to us, but TradeStation. But it comes up with what's called the buying power. Very useful if you're familiar with the Paul Desmond work on Lowry research. So going back here, we got 2 days of negative 90. I think we were 91, 92 at one point intraday. And this is very constructive. This is a flush. This is usually the flush. I did my work I just added it to a NASDAQ. Not a big deal. The most of the research is done by S&P 500 because more name, 80% of U.S. equities, plus more sensitive to, less sensitive to one area, which is technology, which is predominant on NASDAQ. Here you have a variety of industries, including some interest-sensitive items, which is crucial. So, to me, the negative 90, 91, I'm not a big student yet. I'm still teaching myself. I hope to learn every day, both from you guys and from everybody else participating. Twitter has been a big help. These should give us an additional confirmation on the upside. Remember, some of this is correlated, so don't get fooled, okay? Gotta look at non-correlating items. Okay, that's that. Let's go to one of our indicators here that I like. Okay, there we go. Okay, this data. Wow, look at this. Let's see. And then this is our last chart here. Yeah. Okay. You could see what's going on here. This is just getting hammered. As always I've said, watch for this bearish divergence on this. The bottoms are easy. Bottoms are very, very easy. The tops are very difficult. Look how long create a bearish divergence, but look what it's doing. It's getting hammered. It's going almost to 55, 50 area. Should pull up today. And this was a tell. Again, I've always said that. Look for a separation of the two moving averages. When they widen, something is happening. When they're so tight, it's just math in a time series. It's not going to go anywhere. It's sideways. But we went from 95, 98 area back in April of this year to look where we are now. Completely destroyed. So something to watch. You can get it from stock charts. And this is the symbol. $ SPX Alpha 200 Romeo. Okay. Wait for an hour for the data to come out. 1 hour. Okay. It's not real time. All right. What else? Okay. Here's overnight. This is where we are now, and then this concludes our briefing. Any questions? We're up 56 here, or 1.2%, 1.2 there, and about 2.34 on Russell. Cause the fusion on fire. Okay, guys, anything else? Any questions for me? Okay, I'm stopping the recording.